After a day off for the holidays, the markets are back with a lot of volatility. We're seeing movement in crypto, TradFi, Fed speak, bank earnings, all of that and much more today on Money Never Sleeps. Welcome back, everybody. Hope you had a great holiday weekend. Before we get going, do us a favor, hit that like button. If you haven't subscribed to the channel yet, make sure you click that one too. Nothing Kevin or I say is financial advice, so please do your own research before making any buys or sells. Kev, welcome back. Good to see you. Hope you had a good weekend, that you're all thawed out. It is still freezing here in Denver, but you know what? We push onward. And we've had definitely an interesting start to the day when it comes to TradFi. We had some manufacturing data that came in quite poorly. We had Fed President Waller speak earlier, putting a damper on the expectations that we're going to be seeing 6 rate hikes this year, like the market has previously priced in. We're starting to see some movement in the the futures probabilities there. How are you feeling about the markets, and where do you want to begin today?
Yeah, definitely. I mean, it's a really I like days like today because there's a lot to talk about. There's a lot to see in the market. There, even if it's nothing too crazy, you know that at least things are happening and it's not just one way. Because we've had a lot of back and forth today in different aspects of the market. So let's start with Waller because I think that's a really interesting place to start with. Because obviously, what a Fed president says versus what the data is and what we're seeing, combine that with the manufacturing survey we got out of New York. Uh, I have a funny feeling they aren't necessarily sold on the idea that they know exactly which direction to take this market, but I can guarantee you that the end result is the same. So let's start with her. Is it a woman or is it a man? I never know. Barkin.
Yeah,
it's a man.
Yes, it is.
Okay. Well,
yeah.
Whatever. I don't care. It doesn't even matter. They're
Christopher Waller.
Perfect.
So there you
go. Yes. The more you know. But yeah, I mean, just hearing, the fact that they expect 25 basis points, I think, for all of 2024, they don't necessarily think those cuts are going to be coming anytime soon. There's a couple of things in the market right now that are very dangerous that could definitely impact that. And, we can get into a little bit of what's happening in Asia, a little bit later. But let's just start with what's happening this week. We got the banks that are reporting earnings, right? And we know that the regional banks,
a lot of banks throughout the week. We got, Schwab, Fifth Third, a lot of them that have shown up in some of the charts that we've talked about over the last 3 to 6 months, where got to keep an eye on what is coming out there, especially if you have money being held by those institutions.
Absolutely. I mean, Chucky Schwab, I'm excited for them because that's the one that I think that is the most exposed. And we'll probably see, some of their
on the way of Chuck E. Cheese soon enough.
Chucky Schwab, Wells Fargo, all those San Francisco banks, sometimes they got to see a little pain for the market to recover. But yeah, we're getting all those earnings this week. I'm really interested to see how those play out. But those earnings are going to be a huge factor in how the Fed is going to have to pretty much navigate these rate cuts, because the number one thing that's going to impact these rate cuts coming sooner or later is a crisis. And the biggest crisis I think that we are seeing is how much unrealized losses are mounting for a lot of these banks. I think it was something like 98 billion for Bank of America the other day that we saw. And I'm like, that better be for the quarter, because we know that Bank of America's losses are significantly higher than that. And then we also have to remember back in 2008, 2009, there was a lot of losses that weren't reported till after the crisis actually fell through. And a lot of those banks should got in trouble. Never did. So we have to understand and operate at the fact that the banks are in a really critical place right now, and the Fed is probably saying one thing to kind of neutralize the markets. And again, it's not Powell saying it; it's a different Fed speaker. If it was from Powell, then obviously I think there might be less surprise. But I think right now this is the opinion of Waller, and they are probably just trying to neutralize the markets, not to spook them, because there is significant risk that is coming by the way of the banks. We keep seeing the BTFP go up while the reverse repo dropped another 20 billion today. Tells you that there's a liquidity crisis in some of these institutions, and these earnings, that they continue to print bad numbers Q4, Q1. we're going to be in a dangerous place for rate cuts. I think they come sooner than later in that instance because they can't stay elevated and these losses can't continue to rise. That's just going to be harder to bail them out at that point.
Yeah, it's going to be a really interesting, I guess I'll say, dynamic, this push and pull we're seeing in the markets with bank earnings. We saw the manufacturing data, if you want to go more in depth on that. Throughout the rest of the week, we have retail sales tomorrow. We're going to hear from more Fed governors as well with Barr and Bowman. So I want to hear what they have to say in regards to what Waller mentioned as well. Like if they're all on the same page here, what's that going to do? We have jobless claims on Thursday. We have some housing data. And then next week we'll get more inflation stuff. So a lot of Fed presidents speaking this week. So that is kind of the main thing as we move toward the end of the month and the first rate decision of 2024.
Absolutely. And I guarantee that not all of them are on the same page when they do speak. And that just kind of evens everything out in the markets this week. I think that's going to be really interesting to see. But yeah, let's talk about New York Fed manufacturing data. I'm going to pull up this tweet once again from our favorite source, Financial Juice on Twitter. Greatest name and also the greatest way to digest all the information that comes out. No bullshit. New York Fed manufacturing actual negative 43.7. Forecast was -5. The previous month was 14.5 under. If that is not a contraction, I don't know what is, because this is way worse than anyone had anticipated. I mean, if it was expected to be -5, well, it wasn't. It was about -38 worse than that expectation. And again, this is a survey. So a lot of people are like, well, maybe this isn't necessarily telling of the entire manufacturing sector within the United States. We often wait for some more of the federal agencies, or I can't remember the name. I think it's ISM, the ISM data, where they'll tell the manufacturing. That's probably the most regarded one, across the entire nation. The problem is this is I had to look at this and make sure this wasn't like a typo or a misprint, because this is concerning as can possibly be. And we know that contractions in manufacturing always lead to unemployment, not only in manufacturing, but also in the services sector, right? If they're not producing as much, goods or whatever it is that they're manufacturing, tends to be a sign that, okay, we don't need these people to be working in the sector, get rid of them. And then because there's less people working in manufacturing, it bleeds into the services sector who rely on manufacturing. Less people are spending money in the services sector. Next thing you know, more unemployment. And then it's just kind of this feedback loop of just screwing everyone over because no one has money to spend when they're unemployed. So this is a huge indicator, I think, of unemployment in the months to come. Again, we always anticipate that unemployment is going to rise with manufacturing going down. Hold on. This one guy just said, it says, bullish markets rallied on it, so clearly everything is priced in. Thornton Mellon. You're lucky I've seen back to.
I can't tell if that's him being sarcastic, like that account being sarcastic or not. Like,
luckily, I've seen the movie Back to School with Rodney Dangerfield, and that's the main character of that movie. So I know he's having fun there, but for a second he almost got me. But yeah, it's a goofy time we're in because
the Triple Lindy,
Lindy, Robert Downey Jr., young. It's a great movie. Vonnegut didn't write that. I love that movie. So, but yeah, so right now manufacturing is absolute shit. That's just a survey. We have to wait for ISM data, but that's just the New York Empire. What was it, the Empire State or something like that? Manufacturing. That's the official report. It's pretty much just New York. But yeah, I mean, it's not good news. And when I see that, along with the equity markets just kind of ignoring it for the most part, I mean, we're down 30 points or so. We're worth down 30 points. I don't know. It seems like the bad news is mounting.
Dow is down 300, so not nothing.
Right. Exactly. And I think as the bad news,
the VIX, had a big gap open as well, and the dollar has made a decent move up today also. So I feel like the markets are reacting to it in a way that you would expect them to, but maybe not quite where it'll be in a few weeks.
Oh yeah, definitely. I think the bad news is starting to add up though, to the point where it's like, maybe it's not a bad idea to cut some up here at the top. And again, I do think that right now a lot of retail is coming in because we're seeing the pre-markets, the futures sell off, and then next thing you know, going into the day, they'll buy the dip, and then it sells off again. That kind of tells me it's like, hey, you know what? This is the perfect opportunity to distribute, give retail what they want, that buy that fucking dip, and next thing you know, it's a dip that keeps on dipping. So we'll keep an eye on that. But I do want to talk about what happened in Asia last night because it's very interesting. As we know, Taiwanese elections were over the weekend. Didn't go the way that I think maybe President Xi Jinping would have hoped. So they were saying that this is an election of peace or war. I'm paraphrasing the exact language that they use, but it wasn't necessarily it wasn't beneficial to them, I think, or at least the narrative isn't beneficial to them, because for the first time in a long time, probably since October 22 lows, we are back and consistently under 16,000 in the Hang Seng Index. That is such a huge move to the point where, hey, look at this. It's been nonstop selling to begin the year. I mean, let me just pull up the monthly so we can take a look how much it's down. It's down 6.93% to start the year, the Hang Seng. And everyone's saying that this is the generational low. And I talked about how we're going to get this death cross coming fairly soon, February 1st. Watch out for that. And we also are in this parallel channel that realistically should pop up. I say realistically. I can't guarantee you that that's going to happen. There is a huge problem over in Asia, specifically China. We know that unemployment is in, for not just their youth, but in general, is at critical levels of just, you thought the manufacturing data that we got was an insane number. The real numbers over there are probably catastrophic. But looking at this here, and people are saying that, this is the time to buy China. I don't necessarily know that. We know that they were in Beijing. They were telling people not to sell off any of the stocks. And regardless, they sold off the stocks at the open yesterday in the Hang Seng, and then they bought it back. And next thing you know, I look and it's like 2:00 in the morning and we're down 300 points from where that. And I was like, oh my goodness, they just absolutely were just selling nonstop yesterday. And that's the first day back from the election. It's a really interesting place. We know that in, what is it, the 29th, I think, is the final Evergrande restructuring meeting that they're going to have in court. We'll see if that gets postponed again, whatnot. But the problem is, as these assets continue to drop in Asia, we know that there's only so much debt restructuring you can do to the point where you're just losing money by waiting. So they're going to either see a fire sale or you're just going to see an absolute crisis unfold in the Asian markets. And that's something that's going to bleed over into the United States eventually. And I bring up this one because there's also other signs that we're in some a pretty bad place globally right now. I'm just going to pull up the Nikkei. The Nikkei is nonstop going up. And this is important because, to start the month, we're up 6.44%. The absolute inverse of what's happening in China. The Nikkei is just going up insane. Now, I talked about this before, but the Nikkei, their all-time high is right over here at 38,870. I did the math on that. It's probably about, 9%, almost 10% a move from where we currently are. We were putting in like 600, 700 point days to start the year. We had a bit of a pullback last night, but there is a good chance we could go for all-time highs or reach the double top in the Nikkei. And now the problem with that is that means that the yen is going to weaken against the dollar. That makes the dollar stronger. That should put some pressure on U.S. equities and other equities globally. But the problem is, when I look at this chart, if this is what it is, we had the lost decade from the 1990s all the way to the financial crisis. And, ever since, we've just been rallying nonstop. If this is one massive ABC corrective pattern, there's a good chance that the Japanese economy could do a repeat of what happened in the 90s, right? So we could be just racing right now to the end and say whatever happens in the world, maybe it's a financial crisis, maybe it's, a dollar shortage. Anything is going to absolutely just fracture the Japanese economy, I think. And the biggest thing, obviously, is rate cuts or, positive rates. If that happens, that's 100% carbon copy what happened in the 90s. Japanese economy absolutely tanked. And if we just look at what happened in the 90s, how fast it went down, we're talking about within months, after being up to 38,000, let's say just to the 50, we're down 30% by, what is that? 4 months? 4 months later, we're down 30% in the Nikkei. So things like this can absolutely happen. These bubbles can burst, but for Japan, it just seems like this is one cyclical pattern that's going to play out, and it needs to play out. But their gain for the short term is also the dollar's game, and it's probably going to impact a lot of other currencies, including the euro, which seems to be pulling back here. We have a lot of problems in Germany right now. But looking at the euro, all these patterns on the shorter time frames that I was looking at, saying that, okay, these are 5 waves, we need to see the bounce. Right now, they're kind of holding true, right? We got our 3-wave move here. We got our first wave 1, wave 2 bounce up here. Didn't go as high as I thought it would, but now it looks like we're kind of putting in our wave 3. Now we could get a bounce here, and then it's another 5 waves within wave 2 and wave 3, and it's all the inception shit that we always talk about, and it's super, super, I can't think of the word right now, but you pretty much be nitpicky, I guess, just looking and trying to find the wave counts in there. But for the most part, this rejection here, I think that that's a good sign that we are probably going to be going lower unless this whole thing is wave 1. Maybe that could also be like this and we get a bounce there. But I think this is more likely the pattern that we're seeing within a bigger pattern to the downside. What I'm saying is, though, that the other forex currencies are probably going to lose strength here, and the dollar has a really good shot at absolutely taking out some of the losses it saw at the end of the year. And we could be seeing the dollar, like I said, break out of this pattern here and pushing up pretty significantly. The fact we're above the 50 on the daily, we're going to probably test that 200 fairly soon at 103.773. If we get rejected from it, we're probably going to be due for a correction. But right now, this could possibly be a 5-way move to the upside, and we're in the middle of this wave 3, which could push us above that yellow line. If we get above that, there's a good chance that we're going to be looking at 107 again, and at least 105 in the short term, but 107 if anything does happen where the banking crisis gets worse, or anything in international markets continues to exacerbate. So I'm very bullish on the dollar here. Bit of a correction is due, but seeing how fast it moved today against gold and all these other assets, pretty good spot to expect that equities might not be as strong for the rest of the year if that's the case.
All right. Anything else on the banking front before we get into crypto?
Not at all, man. I think that we are pretty good on that. I do want to take a look real quick at Tesla and Coinbase, because those came back a little bit to start the day. They're bouncing back here, but Tesla 219, still below that 15 to 200 on the daily. Good chance we're probably going to see this death cross happen. We might see a rally towards it to try and prevent it, but I don't know if we're going to see the strength to push above it and stay above it. So keep an eye on Tesla. I think that below the 200 EMA, if we get test that and we get rejected, we're probably going down a lot lower. Again, 200 to 194 is the target for that. And Coinbase, we're looking at this here. It's a bit of a bounce here, I guess. We had a really good move down to start the year. We're finding resistance on the 50 moving average. We closed below it on Friday. Now we're, testing it here today on Tuesday. We could trade right underneath it, or maybe on it or above it for the next few days. And if it loses it once again, probably going down to the 200, which is at around 98, probably be about 100, 101 by the time that this does come up a little bit more. Really interesting to see that. Stochastic RSI is going to be important. And the last one I guess we have to talk about, because it's just so funny, is Spirit Airlines. Yeah, that's 46% down at current levels. It actually went down 60%. The reason was a judge had blocked the merger between them and JetBlue. And, well, that's what happens when you get mergers. And again, mergers are not the most bullish thing in the world. It kind of shows you that companies are in pain. Them blocking this is a good sign that, well, it's a good sign that there's a lot of issues in the economy. I think a lot of people dump this just because of the news itself. Maybe it's a bit of a buy here. I don't know. I'm not going to buy Spirit Airlines. I don't have enough faith in Spirit Airlines here to be buying that stock and holding it for what I expect to be one of the greatest financial crises of our lives. But when I see this,
their ticker is save. Okay, it's because you want to save your money and don't buy this fucking stock. That's what we're doing here.
If you want to join the Spirit Squad and buy this thing and hold it and hope for a short squeeze that'll bring it back to break even, be my guest. But
it'll be the first airline meme stock, I think.
I mean, shit. And this kind of goes in, before we get into crypto, this kind of goes in with what's going on in oil too, right? Oil has not moved, and there has been so much news on the Red Sea and all that front over there. We know that Shell is halting shipments in the Red Sea now. Oil's at 72.18. It has not moved. It has been sideways this entire time. That scares me a little bit because, one, I do think that there is one last little squeeze. Something happens that pushes oil up to like $77, $78 just to finish out this ABC pattern. But I don't underestimate demand, and I'm seeing such low demand for oil. And if we continue to see that for oil, you can probably tell that the airlines are going to be seeing some pain because everything's connected. And it kind of lines up with the numbers that we're seeing in manufacturing. So oil is going to be really critical here. yes, maybe we get up to the 200 EMA on the daily, ABC, finish that, but then I anticipate us another 5 waves down. I think that very soon, once we do complete this, we're going to probably be seeing oil once again in the 60s, maybe even in the high 50s. And that is not something necessary. I mean, sure, it looks good, I guess, for the administration. Oh, gas is coming down, guys. But the reason it's coming down is just a huge sign that maybe the inflation that we're talking about isn't coming back because people just don't have the money to spend, and a lot of these oil companies kind of know that at this point, and they're just like, you know what, let's just try and meet demand and find where that demand is, because right now it's definitely not higher. And we could throw as many news stories as we want at them. It can last momentarily, but it's not going to be long lasting. Oil is telling me that it wants to go a lot lower, but for the short term, a little bit higher, probably towards at 77, 78. But I'm not getting sold on that idea just yet. So that's all I have on the TradFi front. I think that's a good enough that we've looked at. Let's talk about crypto. Anything specifically you want to look at in crypto, because we are now crypto/TradFi apparently now.
Yeah, we're seeing a nice little run up in ETH today, one of the big winners at the moment. So we can look at, why don't we just go BTC, ETH, and then we'll call it a day.
Yeah, absolutely. We'll take a quick look at the ETFs too, just so we can laugh. But here it is, BTC. Looks like it's holding the 50 moving average on the daily. Daily stochastic RSI is extremely oversold, right? I still believe that there is room for us to double top around that 48, maybe 50,000. I think there's a good chance of that, just because everyone's kind of shocked by what's happening with a lot of the moves in the ETF. We know that Grayscale is also selling a shit ton of Bitcoin, or they're going to sell. We know that there's a huge amount of supply that they've been moving on to the exchanges. We can see that they've pretty much been liquidating their ETF positions. Now, the interesting thing here, if we do get to 50K, that kind of helps out Grayscale and a lot of these other companies that need to sell off a huge chunk of their Bitcoin portfolio or positions, right? So I think that if we do get it up here, you're going to be thanking Tether, or at least a lot of people will be thanking Tether for helping them get to that point where it's like, hey, let's offload, let's get some more people, retail, to get excited, because it's like, okay, now it's priced in. The ETFs sell off has been priced in. Let's buy this thing. We're going to go to 55K. We're going to go to the fucking moon. This is the future. That's probably a really good trap for a lot of these TradFi people right here. So I expect us to see another pump up. I'm not getting sold on the idea that we're going to go straight down. If we do, that's like worst case scenario. That hurts everybody. So I'm more in tune with the fact that they're probably going to try and prolong this, sell a little bit more, distribute from higher, and then eventually we are going to see this collapse where we're going to test, 34,000. We lose 34,000. We're probably going to hit to 30,000, which is what I think a lot of people are expecting us to go, because that's the last bit before we started pumping up stupid in October. Now the question is, if we get down to, let's say, 50,000 from up here and we go down to 30,000, that's a 40% drop, in line with what we expect before the halving, as we do know that the halving does drop about 35 to 40% on average before it begins. And now with that, we're also out of this parallel channel. So some people might be extremely bullish here and think that, okay, that's the halving drop. Now we're going to fly into a bull market. Wait for the rejection on this parallel channel, because if we don't break back into it and start trading in it again, you're going down a lot lower. And I think that's going to be in line with a lot of what's happening in the financial markets, with the dollar going higher and also equities having a bit of a pullback. I think 40% is a conservative move down. I think it's definitely warranted given what we've seen in the past, but I think we are going significantly lower in this market. I think that we are within right now beginning of a bear market. If all of last year was a bull market, then we're in another bear market. So I would anticipate, 2022 was a good move to the downside. I think it was like 70% I would anticipate 70 to 80% drop from here for Bitcoin, but that's just me looking at the charts and seeing what's happening there. Now, ETH, on the other hand, I think a lot of people still need to distribute, but we could see that with ETH, the stochastic RSI is getting pretty close to overbought. Had a bit of a pullback. We could just move one more leg up, which I think is in line with what's happening with a lot of other alts. As Bitcoin pulls back, the dominance is kind of loosened. We can see a bit of a push up. I think a lot more have to put in their wave fives, little mania top there. But after that, I'm not convinced that we are going to see any more opportunity to sell from higher for a lot of these altcoins. And I think that's just because these structures will be completed at that point. And you might see little pumps, but I don't think they're going to be pumps that push higher than whatever the wave 5 is. So what you might see is, say say this is the height for ETH, you're not going to see something come down here and then push up again. I think that's wrong. I think what we would see is, push up here to come down, then you see a lower high, and then you start seeing, another lower high, and then maybe a bounce here, and then correction. And it's going to play out that way. I don't necessarily think it's going to crash instantly, but we can't underestimate liquidity in the system. I don't think that the crypto market or the alt market is 100% liquid. And the dangerous part about where we are right now is that people aren't necessarily buying crypto. They are buying ETFs based off of crypto. And what does that sound like to me? It sounds like a derivative. And that's the dangerous part of these ETFs. And I think we're starting to see that, right? So Bitcoin's up on the day. However, a lot of these ETFs are down. We pull up the hourly. It's a little bit easier to see how this is working out for them. So, this is not necessarily the greatest sign you want to see. I mean, again, this is very much IPO-ish in an IPO take, in my opinion, that we are seeing this price action. Could we see a little bit of bounce? Sure. Not holding my breath. I mean, the fact that it debuted at 29.62 and today we're trading at 24.75. I think with Bitcoin's price moving and trading nonstop, we're in a really bad place right now because whatever happens in the aftermarket hours is going to cause more gaps in liquidity and absolutely just liquidations in the TradFi market. And it's going to get people out of the market too, because they're not going to like this volatility. It's like, why the hell is Bitcoin up today, but my ETF isn't pushing up here? I think a lot of people are afraid to get burned by it, but I also know that a lot of institutions are just absolutely dumping a lot of this. They probably have the most amount of shares and they're just like, you know what, screw it. Let's do what Grayscale is doing over here. And pretty much as soon as the ETF gets approved, we're just going dump. I mean, look at this, how much it's dropped since. And they had the advantage, right? They had the Bitcoin Trust already. They transferred it to a spot Bitcoin one, and here we are down almost 12% since then. So it's a really dangerous place in the market. I think these are all derivatives. I don't care what anyone says. The ETFs you're betting on the price of something going up or down, primarily up, and the fact that it's not necessarily tracking 100% perfectly just yet is dangerous. But I also think that it's going to be tracking it probably at the wrong time when Bitcoin's price is tanking absolutely to the downside. So it's a very dangerous market right now, I think, these ETFs. I got nothing else other on that front. I think that there are some interesting things that are going on in crypto. I'm just going to say this right here. Watch out for TUSD. I think that's something that you're going to be keeping an eye on. See if I can find it on the crypto market cap, or maybe not TUSD. Maybe it's on, is it Binance? No, it's not. There's TUSD, which you guys know, it's the stable coin that Binance loved. I can't even find the pair anymore. What the hell? TUSD to USDT. It's got to be somewhere. Oh, here it is. Yeah, I mean, it depegged significantly on Monday. This is the hourly chart. You can see how bad it depegged from it. This is a dangerous sign, and the fact that it's at 99, almost 98 cents, at that handle, tells me that they are definitely using a lot of what's left in this to move the price of certain assets. BNB is one, because that's the only one that was pumping at the same time. I mean, I could probably just pull this up. Let's go BNB USDT on Binance. Let's do same percentage scale. And yeah, I mean, right there, you can see the orange. It's hard to see. I fucked this up, but you can see where the orange line was to move. And right when TUSD goes down, BNB goes straight up. We'll probably look at a better chart of that tomorrow. I don't really want to get into that because that's a pain in the ass to figure out with the same percentage scale, same price scale, because they're so different. 315 against 99 cents. But we're going to start seeing a lot of this. I think these are the DPEGs you're going to start seeing across the market. FDUSD is going to be another one that we're going to keep an eye on. Pretty much any of the Binance ones, I think we're going to start seeing a lot of stupidity come about, as we know that CZ is going to be talking soon. But stable coins aren't stable. I say that with all my heart. I think the SEC is kind of happy if that happens, because it shows you that the market is easy to be manipulated. And, trading pairs are in a really bad place. Yeah, that's a great comparison chart. Also, it's not great. It isn't. It's not great at all. But, yeah, I mean, that's the crypto market. I think things are finally happening, but we just need to be patient and see them come to fruition, because there's a lot on the table. Anything can go at any given point. They don't want the shoe to drop, but eventually it will.
All right. On that note, we're going to wrap it up for today. Appreciate everybody for joining us. Chris, Mr. House, Randy, as always, enjoy having you guys here chopping it up with us. So please join us tomorrow. We'll be back same time, same place. If you haven't yet, like, subscribe, drop some comments in there, join the conversation. Have an awesome rest of the day, everybody. Stay safe in the markets, and we'll see you next time.
Take care, everyone.